We're on with a nationally regarded expert talking about his book, Fresh Out for 2021. So, Bob, you mentioned the Secure Act, which was a landmark change in retirement legislation. And for those just tuning in, we're with Bob Carlson of the website retirementwatch.com. And you have a breaking story on your website that Congress comes for your retirement money. And first, let's talk about that. How is Congress coming for people's retirement money?
Well, for decades, Congress has encouraged people to put money away in IRAs and 401ks by giving them tax breaks. And now there's trillions of dollars in those accounts, and Congress is tired of waiting for people to take the distributions so that they owe taxes on them. So it's trying to do some things to accelerate these distributions. And one of them was in the Secure Act, where they had said that if someone inherits an IRA, they no longer can use what we called a stretch IRA and allow the money to accumulate in the IRA for as long as possible to continue to compound tax deferred. Previously, under a stretch IRA, you would only have to take distributions out over your life expectancy, and you could leave it in there, otherwise let it compound until you really needed the money. But under the Secure Act, in most cases when an IRA is inherited, it has to be fully distributed and taxed within 10 years. So it takes away that really valuable benefit that heirs had when they inherited an IRA, and it's forcing IRAs to be distributed faster than they otherwise would have, and have people pay those taxes sooner, and probably it'd be at a higher rate because they can't spread it out over the years and get lower tax brackets. They might have to take it out faster in larger amounts and be pushed into a higher tax bracket. So that's the key effect of the Secure Act, and it's just one, I think a part of what's going to be a long-term plan by Congress to try to get people to, or force people to, get money out of their IRAs faster so that they're taxed earlier than they would have been.
Yeah, and it's a real loss for middle-class wealth, like all of these types of rules that seemingly get passed. This week it was just announced they're going for a $15 minimum wage. And Target, Amazon, Walmart, they can afford that. Costco, but the average small business can't. And that's how a lot of these laws go. The little guy gets crushed. So somebody with a $200,000 IRA, no soup for you. You can't leave that to your kids. They got to spend it down, and that money goes on their tax return. A lot of people do not realize, in doing this, Bob, I'm sure you've found people don't even realize that their IRA or 401k is taxed, often at a higher rate in retirement. Do you want to talk about that?
Yeah, it's a lot of misunderstandings both for retirees and as part of the estate planning. When most assets are inherited, there's no tax due, and plus you increase the tax basis to the current fair market value and can sell for no capital gain. But when a traditional IRA or 401k is inherited, whoever inherits it has to pay taxes on the distributions just as you would have. So they're taxed as ordinary income. They get no break the way they would if they inherit other assets. And then for retirees during their lifetimes, they look at the amount that's in their IRA and they think, well, I have that much for retirement. But actually they have to pay ordinary income taxes on every dollar they take out of there. So they really only owe or own the after-tax amount of what's in that IRA. And plus, when they get past age 72 now and have to take required minimum distributions, they have to take that money out whether they need it or not. And for many people, these required minimum distributions push them into a higher tax bracket because they have other assets and they're forced to take out this money whether they need it or not. And that can push them into a higher tax bracket, cause more of their Social Security to be taxed, and even cause them to trigger the Medicare Premium Surtax.
Yeah, so if you like what you hear, folks, Bob Carlson, his new book, Fresh Out for 2021. You want to get it. Where can it be bought? Amazon or wherever books are sold? Or do you have a website for the book?
It's on Amazon, and it's also on the publisher or regnery.com. So either place will have it at a good price.
Yeah, 2021 edition, Social Security, Where's My Money? You can buy it wherever books are sold, Regnery or Amazon, or you can get it free when you schedule and keep your no obligation retirement Social Security review. We'll talk more about the Secure Act and take your calls.
The preceding program was sponsored by the Jalinski Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and Top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Advisory services offered through Wealth Quarterback LLC.